Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on today's show?
Well, we're going to talk about two topics that we've talked a lot about, Patriot Battery Metals and its resource estimate, and Verde Agritech and its carbon credits. But we're also going to talk about Eskay Mining, about which we haven't had anything to say for a while, and the stock has developed an uptrend that is quite impressive compared to how the rest of the resource juniors have been doing.
John, will Patriot Battery Metals deliver its maiden resource estimate in July as promised?
The company has stated that it will have this maiden resource estimate for the Corvette lithium project in the James Bay region out by the end of July. And with the night market research short attack sort of predicting that this is not going to happen, they're under a lot of pressure to do so. And in fact, they only have 1 day left to do. Today is July 28th, Friday, and July 31st is Monday, the last day. The stock was up today because speculators believe that they are going to deliver on their promise, and that when trading opens Sunday night, our time in Australia, we will have a resource estimate on the table. So the expectation is anywhere from like what the night market research said, it's around 75 million tons to as high as 150 million tons. But what I think will happen is everybody, whether they're a naysayer or a bull, is going to be able to claim that they are right. When we get into these higher 100 million plus numbers, you can achieve that by adjusting the cutoff grade. And the cutoff grade is going to be determined by open pit constraint numbers. I've seen very large resource estimates come out, such as for Liontown and Kathleen Valley, with huge initial inferred resource estimate. But what goes into production at the end of the day, after multiple feasibility studies which undertake cost discovery, is a smaller portion at a higher grade gets put into production. So I suspect we will see a base case cutoff grade chosen, which will probably be a number that at least makes it over that 100 million ton threshold that that night market research has accused Blair Way of hinting they're going to accomplish. But there'll be a set of lower cutoffs and a set of higher cutoffs. Because the real question will be, what operating rate do you want to put this into production? And if it's going to be large scale, it has to be open pit. And for a mine life, are you going to pick 20-year mine life, or are you going to pick something shorter, 10 to 15 years? Now, nothing in the James Bay region, especially this northern part, is likely to be in production before 2030, by which time demand for lithium should be going through the roof, especially if Toyota has indeed achieved this breakthrough of a car that charges fast and has huge range and doesn't cost a fortune. So you would want to pick a mine life of, say, 10 to 15 years, because by 2040, who knows if lithium-based technology will still be the primary technology pushing electric vehicles. It could be hydrogen fuel cells. So you're going to look for a resource tonnage estimate that can be depleted in 10 to 15 years, be ready by 2030, be open pitable, and ideally have a higher grade. So in this whole set of tonnage estimates, there's going to be a whole range, and there may be one that's equal to night market research's prediction, and there may be some of the more optimistic ones over 100 million tons at a similar grade. In any case, I think the outcome is going to be received positively by the market. Now, the question is, night markets research, big allegation was that you are at the peak of the Lassonde curve, what I call the S curve, and as we head into the dreary cost discovery portion of the feasibility demonstration part of the cycle, the market is going to lose interest. And so this also becomes a game of chicken for the Albemarle's and the Rio Tintos on the sidelines, hoping to get this, see how low Patriot Battery Metals can get so that they can do a buyout. And one thing overhanging the market is these 24 million warrants between sort of 45 cents and 75 cents, way in the money at this $14, $15 per share range, largely held by retail or high net worth investors rather than institutions who by now would have exercised. This is a potential overhang. If the market senses that the stock is just going to sit there and do nothing, these people will start exercising. And this is the potential downside for Patriot Battery Metals in the aftermath. And a lot of, at the same time that the fire restrictions have been eased, we've heard now Brunswick Exploration has boots on the ground on the Mirage property. By sometime next week, we may even hear that they found where this 1,700 meter by 200 meter boulder field is coming from. Other companies are heading into the field also. And so you're going to see all these investors who have made a windfall score through their warrants sitting thinking, okay, Patriot Battery Metals now going to become an institutional stock, maybe get bought out at a higher price, maybe these levels. I'm going to exercise and I'm going to sell. And because I have an instant capital gain that will come due in April next year, I think I'm going to gamble on these other ones that have been sort of kept in the gutter because of this forest fire access problem. I expected lithium mania in the James Bay region to be roaring by now. Takeoff was supposed to be June 1st. Instead, we were all put in the penalty box and said nothing can happen. But now as the fires subside and access is opened and the boots get onto the ground, and some big companies like Brunswick start confirming, yes, we do have something, you're going to see an outflow of capital from Patriot Battery into these considerably cheaper juniors, ranging from something like Brunswick, which is about a tenth the valuation of Patriot Battery Metals, to something like Dios Exploration, which is a hundredth of the valuation of Patriot Battery Metals, and all of them capable by the end of this year of having something in their sights that could be of equivalent stature. Now, obviously not with all these holes and drilling to support a resource estimate, but the way these great Canadian area plays work, once you have validation of it and you have an argument to be able to repeat it, you're going to see the money flow. Now, the offset for Patriot Battery Metals stalling and coming down and making night market research short sellers happy is the Australian audience. They understand this game. They understand the long-term picture. They've already been through Lithium Mania 1.0 with all their big winners like Pilbara Minerals, Mineral Resources. Liontown is one of the more recent winners that they have. So there could be institutional capital coming in, happy that there's now a reliable resource estimate backing their decision to own this stock, which can absorb the paper from all these Canadian and Australian retail investors that's looking for a new home so they can redeploy into the other juniors. And this, if we get an uptrend going, that becomes a self-fulfilling prophecy. And so this will snowball. But of course, some companies won't have accomplished anything by the end of the year. And so there could be some tears when the gamblers who redeployed their profits from Patriot Battery take their losses in the other juniors and blow them out in December. So it's going to be a wild period of between now and the end of the year. But let's see if on Monday we have finally a resource estimate for Corvette on the table, and then let's see how the Australian institutional market reacts and what the big guys on the sidelines who need to own this are going to do, how they are going to play this.
Why did Verde Agritech jump this week?
Well, last week they put out what I thought was a very important announcement, and in last week's Kaiser Watch episode I talked about it. They reported that Newcastle's Professor David Manning had completed a study which confirmed that for every ton of K-Forte, the glauconite material that they sell as a silicate alternative to potassium chloride, it was capturing 120 kilograms of carbon dioxide per ton of applied K-Forte. Now, this opened the potential for selling carbon credits linked to each ton of material applied to the field. And the company said that the next stage is to confirm what the life cycle analysis is of how much carbon dioxide is actually generated by mining the K-Forte, grinding it up and transporting it to the farms, and then applying it to the fields, because you're not going to be able to sell the total carbon consumed or captured by this material. You're going to only be able to sell the net. And when I talked to Chris Veloso last week, the news release had said that they've commissioned an independent Canadian consultancy to do this work. He suggested that maybe 3 to 4 weeks down the road. However, this week, they stunned the market by saying that they are in advanced negotiations with international corporations that buy these kinds of carbon credits. And I scratched my head and said, how can you be doing this if you don't know the net number? Well, obviously, they probably already have reliable internal numbers. And in fact, in the press release, they said that at their production capacity, they could generate 300,000 tons of carbon credits. And so 3 million tons per annum K-Fort production capacity would generate would pack away 360,000 tons of carbon dioxide based on that 120 kilogram per ton ratio Manning established. And that means subtracting 300,000, that means there's 60,000 tons of carbon dioxide generated. So this means they would have a net 100 kilograms of saleable carbon credit for each ton of K-Forte that they sell. Now, I think this is important because this is a huge growth story about replacing Brazil's potash reliance, import reliance for their farm sector. And what's also been very interesting in this week is in the Financial Times, it reported that Rio Tinto has admitted that all its efforts for certain carbon dioxide reduction goals by 2030, it is failing at them, and it has admitted we're going to stick to our commitment, which means we're going to have to go into the carbon credit market. And this week also, word came out that the Lula government is very busy creating a whole protocol to develop a carbon market in Brazil in order to push Brazil into the energy transition, even as they continue to promote Petrobras and its oil production. So one of the things that was interesting in the press release is Verde Agritech included a link to a document, which is a sort of a 58-page document produced by Microsoft called Criteria for High-Quality Carbon Dioxide Removal. And this is done in conjunction with an entity called Carbon Direct, who organizes all these sort of carbon-type credits. And Microsoft has committed to being carbon dioxide negative or greenhouse gas negative by 2030. And why negative rather than just neutral the way the mining companies are? Microsoft wants to be able by 2050 to have captured all the CO2 that its operations have generated since Bill Gates and Paul Allen founded the company in 1975, which means that Microsoft is focused on using its surplus cash flow to buy carbon credits. And this booklet, it covers 8 different ways of carbon capture, which is more like from the air direct rather than from at source, like say at a power plant where you're capturing the CO2 as it's burned and then piping it or disposing it. And 2 of them that are relevant to Verde Agritech are a chapter on pages 36 to 40 called Enhanced Rock Weathering, and another one from 41 to 45 called Carbon Mineralization. Now, the company uses the term enhanced rock weathering to describe what it's doing. But when you read it, that involves spreading some ground-up silicate material, usually some ultra-basic rock, onto the fields, it ending up breaking apart and carbon dioxide getting dissolved into the water to form a bicarbonate ion, which then supposedly ends up in the water system and gets flushed out to the ocean, which is a giant carbon sink, and it disappears. This is really not easy to measure, and it has the risk that there are other elements that get liberated in the rock that you spread onto these fields that is harmful to the environment. And Microsoft has created a whole set of criteria to make sure that the solution isn't worse than the problem. It's that cure isn't worse than the problem. But when you look at the press release today, the company spells out that what happens to the K Forte is it forms a new mineral structure. That means it's the carbon mineralization type of conversion that's happening. It's not just some ion in the water that's supposed to flow out to sea and whose beneficial effect you have to model and is always going to be open to question. This is very similar to FTX Nickel's brucite CO2 lock strategy, where you're going to show how when the carbon dioxide gets injected into these rock masses with this very receptive rock that chemically converts it into a carbonate. Verde Agritech made clear that it is this kind, and this is the kind that Microsoft and the others all prefer because it is very durable and it is quite measurable. Except the beauty of K Forte, it's not like some rock which serves no other purpose other than to capture carbon dioxide out of the air. This product is a byproduct of fertilizing the fields with potassium as an alternative to the potassium chloride, which leaves a salt in the dirt, which is harmful, gets into the water, ruins the fertility of the soil. The glauconite does not do anything of the sort, and this is why I think with Lula getting behind the energy transition and quite concerned about the future of his country's farming soils, we're going to see a lot of support for this. So this is a watershed development for Verde Agritech, and it's quite exciting to hear that serious parties are already talking to the company about how to do this. And of course, unless you sell the product, you can't sell the carbon dioxide, the carbon credit. But for farmers, if they can buy potash at a much cheaper rate than what the potassium chloride source costs them, that's what motivates them. So we potentially have a huge sales penetration strategy unfolding, and they said by the third quarter of this year they could have their first carbon credit sale. So this is a very exciting development.
Why has Eskay Mining developed an uptrend?
Well, Eskay Mining had a pretty difficult first half of the year because of uncertainty about its balance sheet, the lousy market for resource juniors, which made it difficult to drum up any optimism. They did a lot of drilling in the past 2 years on the Eskay project in the Golden Triangle, but they weren't raising any money. And one of the things on the balance sheet was a $2.7 million liability that was now in the current liability section, meaning it was due within a year. And this was owed to Seabridge, which in July 2021, Eskay Mining did a deal with Seabridge to split the costs of a $12 million access road to the KSM project. Now, the KSM has already had feasibility done on it. It's a giant copper gold system. Seabridge needs this road, but somehow Eskay's CEO, Mac Balcom, thought it would be good to, let's pay half of this road, even though we have nothing yet resembling a resource, a 43101 resource. It was a kind of like the Hubris Peak, which looms over the valley there, somehow cast a shadow on everybody. Anyways, this did eventually come back to bite them because as of this year, the TV and Jeff zone, where they did most of their drilling, they got nice high-grade intersections, but none of it really hung together. In fact, in the January 2023 corporate presentation, the only work that was planned for that this year was involved the unraveling the complexities of this system. In other words, it's too squirrely. It isn't like the Eskay Creek 21B zone. This is not a clone of that. It is interesting stuff, but what it's connected to has not yet been figured out. And the stock traded as low as 50 cents on May 17th, and that was sort of low. But then we got announcement on June 7th that a deal had been done with Seabridge to basically cancel this loan, and Seabridge was going to be spending its money on the road on a different segment that isn't related to Eskay Mining in any case. And so with Eskay not really having a clear discovery on its hands yet, they decided to just unwind this. So that made the balance sheet suddenly not be basically neutral with this looming repayment required. But that did not really encourage anybody to help the company raise any money. So the next really important development was July 10th, when the company announced a non-dilutive financing in the form of selling 5 claims to neighbor Skeena Resources for $4 million, $2 million of which it got right away, $1 million which it will get on October 31st, and another $1 million at the end of the year on December 31st. And that really started to help the stock higher because all of a sudden they could mount a program. Now in May they had done this depressing news release saying that after the very grand predictions of extensive drilling all over the property and going back to the Sib Lulu thing, and by the way, they haven't updated the January presentation yet. I don't quite understand why that's still the case. But by May, the outlook was, we're going to do target development work and maybe potential drilling, but it was all kind of a function of the money. Well, with this Skeena sale and these claims, the company, Skeena didn't even bother making a news release, and Eskay did not include a map, but I've compared the maps from January with the map that they put out recently, and you can see this is a block of claims that's not really attached to the main property. It's actually on the northwestern side of the Skeena Eskay claims, and so it would never support a standalone mine. It would, if you found anything there, you would sell it to Skeena anyway. So I think this is a brilliant transaction to do in a horrible market. And this all came out. What they plan to do now came out this week in a press release on July 27th. They now, with this money, they've got 6,500 meters of drilling in 5 target areas that aren't even outlined in the map they included with their January presentation. And the most interesting area, and they've included a long section with a line. It connects the Tarn Lake Scarlet Knob area where they drilled last year. In the middle of it is this Bruce Glacier target where they were not able to get to last year. They're going to be drilling that. But they've also, in the northwest direction, found outcropping contact mudstone, which is the sort of the host where that for the Eskay Creek deposit, and they have targets there. They call that the Story Creek target. So they've got one drill in this area starting already. They're putting another one onto the property. What's interesting is of all the past targets, only the TV area is getting one, and even this. It's a new target that the TV zone is cut off to the south by a gabbro dike, but they think the zone continues. The gabbro dike is post-mineral, so they got one hole in August planned to test to that area to the south. But there's several brand new targets. There's the Hexagon Mercury target, which is northwest of the Jeff zone. And then there's one way in the northeastern corner called Maroon Cliffs. These appear to be geophysical targets with some sort of nice geological context, but maybe not. And then interesting, to the south, there's a target called Cumberland. I remember hearing about it in 2021, but it disappeared from the January map. Well, this was drilled a couple of decades ago with, maybe some smoke, but no obvious discovery. They're going to go back in there and drill a couple holes. But my eyes will be on that whole Story Creek, Tarn Lake, Bruce Glacier, Scarlet Knob area. And there is where they have something to be found. And I like Quinton Henney's declaration at the end of the press release that sharpshooting multiple high-quality targets. So I like the way Quinton Henney finished the press release with a declaration that sharpshooting multiple high-quality targets is the best approach to make one or more new discoveries in 2023. I was dismayed last year on how they just focused on Swiss cheesing in the vicinity of the TV and Jeff zones. This year, they've got brand new targets that haven't really been tested before. So I think from a mere 6,500 meters of drilling, we could maybe have the discovery by the end of this year that we've been waiting for during the last 3 years.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.